Hi guys, it's Sarah. I lead the L&D division here at Lendy. Whilst applying for an investment loan is similar to the process of an owner-occupied property, there are some different ways you can get the funding for the investment. We're going to cover all of this in today's video. Let's jump in. The first option you have for purchasing an investment property is to use a deposit. The bank would then lend you the rest of the money that you need to purchase your property, just as they would with an owner-occupied property. You would ideally need to save a 20% deposit, and the funds would need to sit in an Australian bank account for at least 2 to 3 months before you can use this money as a deposit. This will likely identify you as a lower risk borrower and put you in a really strong position to be pre-approved. You can borrow with a lower deposit, but your options will be more limited and you'll likely be charged lender's mortgage insurance, or LMI. So if you have a low or a no deposit, an option that you could consider is using a guarantor. A guarantor is a close family member, usually a mum or a dad, that can use the equity in their property to help secure a portion of the loan for you. This is a good option for those of you who want to speed up the process of owning a property. It does come with a risk though. If the borrower loses their job or they're unable to make repayments, the guarantor may be required to repay the portion of the loan that they secured. The third way to purchase an investment property is using equity in your own home. Many investors use equity in their own home as leverage towards their next purchase. You can release equity in your home of up to 80% of the property value and use this as collateral towards your new purchase. For example, if your property is worth $1 million and you had $600,000 remaining, you could release $200,000 of your equity and use this as a deposit to go towards your purchase. Once you've figured out the method of how you're going to get your investment loan, the next step is making sure that you can prove to the lender that you can comfortably make the new repayments. Most lenders will be looking at your income and your bank statements. They'll look at your employment history and your credit history. They'll look at your assets and your liabilities, and they'll do this to assess whether you're eligible to be approved for a home loan. As part of the approval process for investment loans, lenders will consider projected rental income as part of your ability to cover the mortgage. Finally, consider getting a pre-approval. A pre-approval will show you the maximum amount that a lender is willing to lend you based on a full assessment of your financial situation and the type of investment you're looking at purchasing. It's free to get a pre-approval and you'll know what your repayments will be. This can help when it comes to realistic purchasing budgets. When applying for pre-approval, you'll also want to consider the structure of your investment loan. While most owner-occupiers are on principal and interest repayments, with an investment loan you can choose whether you want to have it on interest only or principal and interest, and this will depend on yourself or your family's goals. Making P&I repayments means that you can lower the loan amount and ultimately pay less over the life of the loan. Interest-only repayments means that you'll only repay the interest charged on the loan, and this is for a set period of time, usually 5 years. This will help to lower your monthly repayment, and this could be a good idea if you're considering selling the property before the interest-only term is finished. Bear in mind, interest-only repayments tend to have a higher interest rate than principal and interest do, so you might want to keep that in mind when you're making your decisions. If you're looking to get approved to purchase an investment property, jump onto lendy.com.au. It only takes a few minutes. Our online home loan platform compares rates from over 35 banks and lenders, and we have a team of home loan specialists that are there to help you every step of the way. So that's it guys, these are the steps to getting an investment home loan. If you want more information on how to get a pre-approval, you can watch our video here, where we'll go through the process in more detail. I'll see you there in a sec.